and recording it. And for that purpose, good evening, distinguished guests, representatives of our partners, the Barbados Bankers Association and the Inter-American Development Bank, members of the media, members of the public, in person and online. I am Lisa Padmore, Chief Executive Officer of the Institute of Chartered Accountants of Barbados. It's my privilege to welcome you to this financial literacy event entitled Empowering Financial Futures, hosted in partnership with the Barbados Bankers Association, represented tonight by its members, the Republic Bank Barbados Limited and the RBC Royal Bank Barbados Limited. This event would not also be possible without the kind support of the Inter-American Development Bank, or IDB, who's represented this evening by Mr. Michael Hall. Today's gathering underscores a shared commitment to strengthening financial knowledge across our society. Financial literacy is a cornerstone of economic resilience. For households, it means the ability to manage resources wisely, plan for the future, and achieve financial security. For small and medium-sized enterprises, it is a driver of growth, enabling access to capital, fostering innovation, and creating jobs that sustain our local economy. This is why our partnership with the banking sector is both timely and essential. Banks are integral to the financial ecosystem, and by working together, we can close knowledge gaps, build trust, and ensure that financial services are accessible and inclusive. This collaboration reflects a unified vision of financially empowered community that thrives on informed decision-making. I encourage you to engage fully in this evening's sessions. The insights shared will not only benefit individuals and families, but also strengthen the foundation of our business community. Thank you to the Bankers Association of Barbados, or TBBA, and the IDB for its partnership and support. And thank you to each of you for being here. Your participation demonstrates that financial literacy matters, and together we are shaping a stronger future. Before our presentations from our banking colleagues, I'll invite first the President of the Institute of Chartered Accountants of Barbados, or ICAB, Mr. Damien Skeet, to bring us some brief remarks.
I just want to say good evening to everyone, those, again, who are in front of me and those who are online. This evening, it really brings me tremendous joy to be here as ICAB's president, but also too as a small business owner, because the importance of financial literacy. And I do understand and I do share in sometimes the pain of a small business owner and the challenges that they do face. But I just also want to express similarly my sincere appreciation to the Barbados Bankers Association, certainly their president, Shimon McIntosh, and also for the IDB as well. Particularly now Mr. Michael Hall, who is certainly supporting tangibly to this initiative. This collaboration is a clear example of what can be achieved when organizations come together with a shared vision to empower individuals and businesses through knowledge. You see, financial literacy is not just a personal skill. It is a national priority. It impacts households by helping families make informed decisions, and it strengthens our SME sector by enabling businesses to access financing, grow sustainably, and create jobs. These outcomes are vital for the health of our economy. This event certainly also aligns perfectly with ICAB's recently approved strategic plan for 2026 to 2028. Two of our key pillars are education and advocacy, and financial literacy sits at the heart of that commitment. We believe that informed citizens and financially capable businesses are essential for long-term economic resilience. ICAB has been in continuing discussions with the National Financial Literacy Bureau, and we do have some representatives and the head with us here, since its development, and we are committed to supporting the national agenda to educate and inform our citizens over ICAB's next 3-year strategic cycle. This collaboration will allow us to amplify our efforts and ensure that financial education reaches every corner of our society. So as we move forward, let us continue to work together, professional bodies, financial institutions, and government agencies, to build a community that is financially savvy and certainly ready for what lies ahead. So thank you once again to the Bankers Association for your collaboration, the IDB for your support, and thank you all of you who are participating in today's event. Together, I believe that we are making a real difference, right? And before I go, I also want to wish you a happy independence, 59th year, and certainly our 4th year as a parliamentary republic. I really want to emphasize that I hope that this event is not only what we will call a talk shop, but the information that we get from it, that you absorb it and that you inculcate it into your businesses and in wherever you are in life, and certainly action it. That is where the real value will come. So thank you so much, and good night, and I look forward to an important event here this evening.
So we'll now have some brief remarks from our two partners, starting first with the IDB. And those remarks will be delivered by Mr. Michael Hall, a financial sector senior specialist with the Connectivity, Markets, and Finance Division of the IDB. In this role, he supports inclusive and sustainable development of financial markets throughout the Caribbean and Latin America. He leads programs that increase access to financing for micro, small, and medium-sized enterprises, strengthens capacity for local institutional partners, and increase investment mobilization for climate resilience. Michael earned his MBA in the US, and I'm sure he'd like me to stop there because now he wants to speak. So ladies and gentlemen, Mr. Michael Hall. You got it. There you go.
Thank you. I was willing to let you keep going, actually. But. Good evening, everyone. And thank you so much, Ms. Padmore, for the very gracious introduction. Oh, this thing's not going to stay up, is it? Yeah, if I'll take it out, maybe that's a little bit easier. So I'll be very brief, because I know you all didn't come here to listen to me speak. But it is my great pleasure to join you all here this evening, and I thank you for giving me the opportunity to make some brief remarks on behalf of the Inter-American Development Bank. At the IDB, we have a keen interest in collaborating with our partners in order to help solve the challenges that the people of Barbados face. When it comes to the challenge of improving financial empowerment and financial inclusion, these are areas that are central to our strategic goal of helping to revitalize the economy and promote inclusive and sustainable growth. So when Ms. Padmore reached out to us about sponsoring this event, I quickly responded in the affirmative. I'm also pleased to be here alongside members of the Barbados Bankers Association, ably represented by teams from RBC and Republic Bank, who will be leading tonight's workshops. It just so happens that these financial institutions have been the two most active participants in the Enhanced Credit Guarantee Fund, which is a program financed by the IDB and managed by the Central Bank of Barbados. Now, if you allow me, the goal of this program is to increase access to finance for micro, small, and medium-sized enterprises by providing additional security in the lending process and protection against default. And I'm happy to share that we recently completed the approval process to expand this program with an additional 100 million Barbadian dollars in capital. Thank you. As we aim to continue our support for productive investment in the local economy. So, that said, I would encourage our business owners in the room, in the audience, if you're seeking financing and you have strong business plans, discuss this opportunity with your banking partner, see if it makes sense for your investment strategy going forward. Now, I say all of this not only because this is my program and I'm very proud of it, but also because I believe it ties in well with tonight's event, which I see as helping to bridge the gap between having an idea and then having a plan to execute on that idea. So financial literacy and education are key elements for individuals and businesses to be able to close that gap. With that said, I commend you all for taking the step and attending this event to expand your financial knowledge, and I wish you all a very informative and productive workshop. Thank you. Put this one back.
And to provide remarks on behalf of the TBBA, we have Ms. Tamara Harewood, who is an experienced banking professional with RBC. She leads and coaches a team to deliver exceptional client service and financial advice. And Tamara has a master's in international management and a BSc in banking and finance from the University of the West Indies. So to bring us remarks on behalf of the Bankers Association and her institution, RBC Royal Bank, Ms. Tamara.
So good evening, everyone. I guess I will hold this. Good evening. So I want to be as very brief, very brief. I won't be like Michael and Damien. So what I can say, good evening again. So based on the numbers I'm seeing today, I can see that it is a session that is really required. So to plan for your future, to plan how you manage your household budget, to operate your own business, empowering yourself is a financial knowledge. Empowering yourself with the financial knowledge is your foundation to stability and growth. The collaboration effort between ICAB and the members of the Barbados Association is timely, and the topics being highlighted today not only supports Barbados' economic resilience, but it allows you to navigate the economic landscape. So thank you, ICAB, for allowing the members of the Barbados Bankers Association to partner with you. Let us use this interactive evening to learn, to share, to take accountable steps towards stronger financial futures. Thank you all for coming, and I do look forward to engaging with you in the engagement session.
She promised us brief, and she gave us brief, ladies and gentlemen. So we thank Tamara. So it will now be followed with a series of workshops to be led by members of the two representatives of the Bankers Association. And if you did not see the QR code when you came into the venue, there is a QR code that actually will point you straight to the entire agenda for this evening. So the first workshop, which is called Managing Personal Finances in Uncertain Times, is being led by Ms. Nikita Norgrove, who is a retail services manager at the Republic Bank, Barbados Limited. And I'm going to invite Nikita to now come and join us up front and take us through her workshop. Ladies and gentlemen, a round of applause, please.
Thank you, Lisa. Good evening, everyone. I'm wearing my pink, which is a bright color, so I just want everybody to be bright and excited like me. So thank you guys for being here, those who are here physically and those online. And Republic Bank is very excited to be here with you this evening. This evening, we'll be discussing, or my task, I should say, is to discuss how we manage our personal finances, especially during times when things feel uncertain. We'll look at practical strategies you can apply right away, including how debt consolidation works and how to manage credit wisely. So I'm just going to wait a few minutes for the technical team. Okay, good. All right. You can go to the next slide. Thank you. All right, so just getting into the meat of the matter, why financial literacy matters. So why does financial literacy matters, especially today? This slide shows exactly why it matters. We're all seeing the impact of the rising cost of living, whether it's groceries, utilities, transportation. Everything basically has increased and continues to increase, and it stretches our income. On top of that, many people have unpredictable incomes, whether they're in sales, contract work, shift work, or even full-time roles that can change suddenly. Because of these pressures, more people find themselves dependent on credit just to stay afloat. And while credit can help, it can also become overwhelming. at any time in our lives and preparing ourselves financially so we can handle them without stress or panic. The pillars of financial stability. So I just listed 4 pillars here of financial stability. So there are 4 simple pillars that help keep us financially stable no matter what's happening around us. The first, budget with, thank you. The first, budget with intention. It's about knowing your numbers, understanding exactly what comes in and what goes out. Intentional budgeting. It's more than just tracking your spending. It's making sure your money is going where it needs to go. Maintain an emergency buffer. Practice paying yourself first. And we women struggle with this. Maintain an emergency buffer. Put money into your savings or investments before spending it. Keeping savings set aside for unexpected expenses so you don't rely on loans or you don't fall behind financially. The third one is investing. Investing in assets with the goal of earning a return. And lastly, it's about using your credit responsibly, treating credit as a tool and not as a source of income. What is debt consolidation? Debt consolidation is a simple concept. Instead of much clearer sense of your financial commitment. It reduces stress and gives you more control over your monthly cash flow. Some benefits of consolidation: lower monthly payments, potential interest savings, reduced risk of missed payments, and simplified financial management. It immediately frees up some breathing room. You may also save on interest depending on the facility you're approved for. As I said, 1 payment is easier to manage than having 5. And fewer payments reduce the chance of missing a due date, which protects your credit score. So when is consolidation helpful, you may ask? Well, consolidation works best when someone has several high-interest debts, like credit cards and short-term loans, and is finding it difficult to keep up with all the different due dates. Okay, I'm going to take out the mic. It is also ideal for someone who wants more structure and control over their finances. The one important requirement is having a stable enough income to support the new consolidated payment. And when is consolidation not ideal? It may not be the right option if the new loan you're offered loan. However, in very rare occasions would you find your debt consolidation, the loan that you're receiving for debt consolidation, to have a higher interest rate and the payment being more than juggling the other facilities. It's also not ideal if overspending habits continue after consolidation, because then the cycle can repeat itself. So you're consolidating debt, you have it consolidated, and then you go and you get more facilities on top of that. And if someone is already managing their payments comfortably, then consolidation isn't always necessary. Managing credit cards wisely. Credit cards are helpful tools, but only when they're managed properly. So some key keep your usage below 30% of your limit, because this also helps your credit score. And avoid cash advances, because they come with higher interest rates and extra fees. A credit card should be used for convenience and not for dependency. The next slide, thank you. Smart credit habits. A few small habits can make a very big difference. So here are a few. Set reminders or automatic payments so you never miss a due date. Review your spending often. Don't wait for the bill to surprise you. Try aligning your payments with your salary dates to stay on track. And check your credit report regularly so you always know where you stand. Some simple tools to also help you stay on track. There are simple tools that can help you stay organized. There are budgeting apps. You can have spreadsheets, even a notebook, like what we had in the old time days. You buy a book, you roll it up, and you write in it. Also, automatic transfers are a great way to build savings without even thinking about it. Tracking your financial goals keep you motivated. And doing a quick financial checkup every few months helps you catch issues before they grow. So some key takeaways in summary. Debt consolidation can make your financial life easier and more manageable. Trust me when I say so. Financial discipline is what keeps everything stable. Responsible credit habits protect your future. And whenever you're unsure or making a major financial decision, please don't hesitate to ask questions and seek advice before you do so. Thank you, everyone.
So we're going to hold our questions until the end of the presentations. And I actually have one already kind of queued up for Nikita. But following Nikita will be Renata Goodman, who is her colleague, a customer service manager in premium banking, which we all aspire to get to, at Republic Bank Barbados Limited. And her second workshop, is going to be on smart borrowing and building credit. And assuming this is also from a personal perspective, but then again, it could also impact upon entrepreneurs who are moving into earning their own income. So, ladies and gentlemen, Renata.
Thank you so much. Thank you. Good afternoon, ladies and gentlemen. It's an honor and a pleasure to be here to present on such a topic as mortgages and smart borrowing. I mean, who doesn't want to own their own home, right? So without further ado, I'm going to go right into it. And what is smart borrowing? The foundation of good credit sits on 5 pillars. Borrow only for the essentials, understand the cost of credit, pay on time, about consolidation, and that's key. The overarching thing in, when you're coming to get a mortgage, when you consolidate, that helps to increase the amount that you would be eligible for the financing for the mortgage. So you want to prepare for the mortgage by understanding your credit score. You are eligible for 1 free credit score a year, and that's through every data. And that allows you to have an idea of, do you have any bad credit out there that you may not be aware of? We think that bad credit only comes from maybe not paying a loan or a credit card on time, but it can also derive from if you have utilities that are not paid timely or other obligations that you may neglect, your cell phone bill and so on. Those things are also very critical. Hire purchase, charge accounts, overdrafts, and those types of facilities are also very important to service timely. Consistent on-time repayment of your obligations is very critical for financial institutions to make a determination on whether we are comfortable on your ability to respect your obligation to service the debt, right? So having a good character in terms of showing that you stick to the obligation of servicing debt is key, okay? Banks generally look at your debt, what we call your debt service ratio, and that's based on 40% of your gross income. And it's key to try to keep your monthly payments, when I say monthly payments, I'm speaking about credit card, loans, and so on, within that threshold. To qualify for a larger mortgage or for a mortgage generally, you should want to try to consolidate first, as I just mentioned, so that you give yourself the best opportunity to qualify for the ideal property that you're looking to get. How to prepare for that home ownership? Now, we are not in the practice of speaking to our financial advisor before we go and shop around for a property. But I would say it's best to come to us first and have that discussion to have a clear understanding of what you qualify for. It doesn't make sense to go and look at a property, fall in love with it, and then come to us and find out that you would not be eligible based on your qualifying amount. So you have construction where you build, and usually those construction acquisitions take 9 to 12 months to complete. You understand the requirements of the application process and the costs and fees associated with home ownership. Because coming for the mortgage is the first step, but that's not the only thing that you have to consider. There are other costs associated with getting the mortgage, after you get the mortgage, and during that process that we'll go into shortly. So adjustments before the adjustments before the actual mortgage. Just like the Lenten season, there are things that you have to sacrifice. You may want to think about, let's do less online shopping, maybe travel a bit less, and adopt a habit of saving so that by the time you get the mortgage, you have already made the adjustment, the transition to making that monthly payment, and it becomes a lot easier. Also, consider investing in a life insurance policy, or policies, I would say, particularly if you have a spouse or children, or you plan to have children, because while we are holding the property as the security, as the collateral against the lending, the fact of the matter remains that we don't speak about this, but in the event that you should pass and there's a balance, obviously we are not in the business of buying and selling properties. We want to give your property so that it's yours to keep, and that is based on the ability to repay the debt. And so the life insurance policy will come in to clear the balance in the event that there's a balance outstanding, before the facility is repaid in full, so that your family is not displaced if something like that should happen. So I would encourage you to also consider life insurance, even though it's not mandatory, it's optional in most cases, it's something that you should consider. And why the adjustment? I just mentioned to you a short while ago that there are expenses and costs associated with a mortgage apart from, you may qualify for 100% financing, but you have to consider legal fees, land tax, comprehensive insurance premiums, life insurance policy premiums. And a house is like a child. There are expenses like maintenance. You have boards that may rot. You have utilities to pay, a water tank that has to be installed to meet Town and Country Planning Certificate of Compliance. And then, of course, the aesthetics of the property. You want to consider landscaping. You want to consider security, whether it's monitoring, a security gate, and so on and so forth. And these are all things that are expenses that you want to save to have to, when the house is completed, you can also spruce it up in that way, right? So that's why we say the adjustment before the adjustment, what are you willing to sacrifice to prepare yourself mentally and financially to be able to afford the mortgage? But gone are the days where mortgages are outside of our reach. It is attainable, not just for the persons that we in our minds think, oh, I can't get a mortgage. We can all get a mortgage. It's just about preparation, being financially savvy, and understanding the prerequisites. And what are the prerequisites to apply for a mortgage? Very simple. You provide us with your proof of income, whether it be a job letter, along with a pay slip. And of course, for persons who are self-employed, I'm seeing persons in the audience that are self-employed, you provide us with the last 3 years' financial statements, as well as bank statements or your financials for the business, especially if it's a registered business, where the business is you and you're the business. So you'd want to know what is the income, the balance sheet, cash flows, and so forth, right? So that we can do a thorough assessment for your benefit and for our clear understanding of what you can afford comfortably. Of course, you also need proof of address, submission of letters and statements showing the balances of any debts that you may have and the associated monthly payment, because that would inform our calculation for your debt servicing capacity. And the offer and acceptance letter from the vendor selling the property, so we have an idea of what is the arrangement, how much is this property being sold for. Of course, the valuation report is key, because we need to understand what's the value of the property. If it's a turnkey, the value is straight market value, but also if it is construction, that valuation report is key during the building phase and so on, because you have to stick to the plan. Many times we may lend, and then you look at the commitment letter, but you may deviate. And if you deviate, it has implications in terms of when we are releasing funds to you, if your project is on track. So it's important for you to digest the commitment letter and understand what are the terms of engagement for the facility. You also have to, in a case, where it is a construction, you also will require town and country planning approval. And that town and country planning approval is key, because if you deviate from what would have been approved, just looking at technical team, what would have been approved, then it, again, causes us challenges in being able to progress the project. So it's key to stick to the plan. You'd also bear in mind that when you deviate from the agreement, the upfront agreement based on that fixed price contract for construction, and you deviate in terms of, you may see a space where you want to add on a room or something like that, and that is not agreed to upfront, that also can cause challenges with the progress of the project. So just want to say to you just to stick to the plan of what was agreed to upfront so that the project can progress nicely and seamlessly. Of course, when you are engaging someone to do your property, something as large as a mortgage, which will probably be your largest debt and longest debt, you want to be sure that you are using a contractor that has experience, that can give you a property that meets a standard. So you would like to get 2 to 3 references to see the quality of work that he would have or she would have done before your property, the constructing of your property. So we mentioned earlier and the documentation that we would require to be able to produce that calculation for you would just be your valid ID, provide your proof of income, and of course the evidence of any obligations that you have, the balance and the associated monthly payments. And in so doing, then we would be positioned to offer you an approximation of what you would be eligible for. I started by saying that gone are the days where we felt that mortgages were outside of our ability to own what we say a piece of the rock. And we have this opportunity here where we are educating you on what's required, how to go about it, and to be open, because many times people don't like to discuss their finances, and by failing to discuss your finances, we are not able to be positioned to advise you properly. So I want to close with 2 quotes. An investment in knowledge pays the best interest, and it's good that you're here. This is why we are doing this, and we want it to spread. And someone is sitting in the shade today because someone planted a tree a long time ago by Warren Buffett. So plant the seeds, don't keep the information to yourselves, and encourage those young persons, young adults, to have the discussions early so that they can practice proper financial habits to prepare themselves for home ownership. It's not because they may be inherit a property owned by their parent that they may not be interested in acquiring a mortgage, because a mortgage is not just for residential, you can also have it for investment purposes. And so it is within your reach. It's just a matter of going after the information, taking advantage of the information, and we are here to assist you, to educate you on the way to go about so doing. So thank you so much for your time and your attention. Thanks, Lisa.
Thank you very much, Nikita. Oh, sorry, Renata. It's been a long day. Thank you very much to our team from Republic Bank. I got the right bank this time. So our third workshop will begin now our engagement with RBC, Royal Bank. And our third workshop is entitled Financial Planning for Small Business Success. It will be led by Annalisa Moore, Senior Relationship Manager, and Janelle Lynch, Proverbs Relationship Manager, both with the banks. I'm not sure how you want to manage the time at the mic, ladies, but
good evening, everybody. We are happy to be here this evening to present on the slide. Let's give the technical team some time to get the slide on. Right, sorry. So yes, I am Annalisa Moore from RBC, and I'd be supported by my colleague Janelle Lynch Proverbs. And we are presenting on financial planning for small business success. So oftentimes we hear about, oh, the bank has given me such a hard time borrowing a little bit of money. The banks don't support small business. When you win, we win, okay? So here are some key areas that we look at when you're coming to the bank. So how banks assess borrowers. So we often refer to the 5 C's of credit. So character, capacity, collateral, capital, and credit. So when you think about character, we want to know about the business. We want to know what experience you have in the industry, right? When you think about capacity, can the business afford the loan? Collateral, what are you going to give the bank in order to secure this loan, right? Capital, how much money do you have set aside to invest into this project? Because oftentimes the bank doesn't fund the full 100%. What is your current net worth? How much money have you invested in your business or your willingness to invest in a project? And credit, this is an important one. Have you honored your debts with other financial institutions, if you have any or had any from before? So next slide, please. So there's 2 key requirements to borrow from commercial banks. So we ask for your financial statements. So usually it's the most recent and the 2 years previous, because we want to look at the history and the business performance. And the quality of financial statement matters. But when you are borrowing on a small business level, let's say 100,000, 200,000, the banks would work with management prepared accounts. And for collateral, we can dive a little bit more, a little bit deeper later on the slides. So let's talk a little bit more about financial statements, why we ask for your financial statements. The three main statements in a financial report are the profit and loss statements, your balance sheet, and your cash flow statement. So let's say you own a small business, maybe in printing. Who here are small business owners? Good. So let's say that you own a food business that you operate out of home and you want to, you have this place that you want to outfit or you want to buy more equipment, or you own a printing company or small printing business, you want to buy a printer. Let's say they cost about $60,000. So you say, okay, bank, I want to borrow some money to buy some equipment. And the bank says, okay, we're going to finance 80%. We're going to lend you over 5 years at 5%. So your monthly payment would be about $900 and about $10,800 per year. So what the bank does with the profit and loss statement is that it assesses your debt service ratio, which our colleague Renata spoke about before, your debt service assessment, that we take the EBITDA from your profit and loss account. So your net profit, if it's a small business, there probably might be some depreciation, right? And we put that against the annual debt payment, all right? So, for example, some banks like to see that debt service ratio can pay back the debt in full, and then there's some space. So back to our example with the printing equipment and this loan for $60,000. So let's say your company makes about $95,000 in the last financial year, and you have about $5,000 in depreciation. So we use that $100,000 over the debt of $10,800, and in this case, the debt service is 9.25 times. It means that you can honor this debt 9 times over. And what do we look for in the balance sheet? We look at the asset levels, the receivables, people who owe you, and how much cash you have at a bank. The liabilities, we look at the payables. Who are you owing? What loans you have at other financial institutions? And then the equity and retained earnings tell us if you're keeping the profit in the business or you're taking funds out of the business as dividends. And we look at the cash flow as well to see how the cash moves throughout the year to support the business operation. So, the topic of collateral. So, a common day-to-day lending for a small business, you might ask a relative or a friend to borrow some money to help you through hard times. Or sometimes you may even ask your spouse, but that could get a little complicated. So we'll leave it to a friend or relative. So they lend based on your character and your credibility. So you don't really need any collateral for that, right? But when you come to the bank, we're gonna need something more tangible to secure that loan to lend to you. So we can hold property, cash, we can hold a debenture over the company, we can use the enhanced central bank credit guarantee, which Mr. Michael Hall spoke about earlier. So, of course, all of these, they have loan-to-value ratios. So, for example, if you have a property worth $200,000, it therefore means the loan-to-value ratio, which most banks carry, of 60 to 80% on the commercial side, you can have a loan up to $120,000 to $160,000 if you qualify for it. All right? So that's my part on this section. So I'm going to invite my colleague Janelle to wrap this up.
And thank you, Anna, for giving that really in-depth overview. So right now, what I would like to do is to segue nicely into the account opening process. So I'm speaking to my small business owners here. So I know sometimes it may seem a bit tedious, it may seem a bit daunting to start that process with the bank. So we're here to make that a little easier for you by explaining the process. So to open that business account, we usually request a certificate of registration, the application form, which you would have used to apply for that business name with KIPO. So we need both those pieces of registration documents, and we will also request from you financial statements for at least a year. I know you're probably saying financial statements already, and I'm now starting the business account. But if the business hasn't started operating as yet, we are fine to accept projections for 1 year. And that process also is very easy because some banks would provide you with a spreadsheet that you can just input that information into, and it provides you with that projection for the year. Some institutions will probably ask for a business plan as well. So in addition to those 3 documents, we would ask for the ID of the owner, and also proof of address. So proof of address could be anything like your utility bill or a bank statement from another financial institution. And there you go, easy does it. Your bank account is open. So we're gonna share with you now some key tips and takeaways that you as small business owners could probably keep in mind. And not just keep in mind, we want you to share it with your households, with your friends and families, persons who may not even be here, because when we educate our households and our communities, then we educate our country as a whole. So some key tips and takeaways. We want you as small business owners to separate your business and your personal finances. We find that small business owners like to put their business takings into a personal account. We want you to separate the two. And we found that a lot with persons coming into us and they're looking to get financing, and then we ask them about financial statements, and obviously they're like, oh, the funds are in my personal account. Unfortunately, we won't be able to use that. So open a business account. That also helps with good record keeping. So in terms of good financial records, the reason for that is it helps you to stay on top of how your business is performing. And when I say financial records, a profit and loss statement, simple, and a balance sheet. Now, you may wonder why all of this documentation, but it also benefits you as a small business owner. We want you to understand that those statements also help you to understand the financial health of your business. How is your business really doing? In addition to that too, when we look at your financial statement, we can also offer you advice. You yourself could look at this statement and say, well, I'm spending too much money in this area. Maybe I could put it into marketing. Maybe I could put it into another area. Instead of just seeing transactions running through your account, this statement is a more comprehensive, gives you a more comprehensive view of how your business is performing. It also helps us, the financial institution, to determine how much debt you can handle as a business owner. We don't want to put more on you than you can handle. We don't want to see your business fail. We want to see you succeed. Another business tip that I will share with you is to manage your cash flow wisely. And when I say that, keep an eye on what's coming in and what's going out. So obviously you want more coming in than what's going out. You don't want it the other way around. So we want you to keep an eye on that. In addition, we found that when small business owners come to us, like for financing, they were saying that they will hold back some of the cash that they had probably at the end of the day, and they put gas in the car, they do all types of things with it, but it never touches the bank account. And we want you to avoid that as well. The reason for that being is because it doesn't give an accurate account of how your business is, or it doesn't give us, the bank, an accurate account of how your bank is doing. And in addition to that, be mindful that as small business owners, you're presented to us management accounts. So you don't need an auditor or an accountant when your business is first started to present to us. So when we look at those management accounts, we need to be able to verify what we're seeing there. And if you're not putting all of the deposits into your account, for instance, you may present a statement to us and the revenue is saying 100,000. We add up all your deposits in your account, we can only find 10,000. Then we're not sure, are these statements reliable? You're saying 100,000, but we're only seeing. So our advice to you is to run all your takings, the monies, the cash for the day through your account, even if it means going back to the ATM to take what you need for the next day, but at least we can see that deposit coming in. And the last tip that I will leave with you is to ensure that you inquire about management services with your bank, because going cashless these days is the best way, right? It protects you, it protects your employees, it protects all of us. So as a small business owner, inquire of your bank what type of cash management services are available. And this would definitely help your business as well. And the last thing that I would probably add is that be sure to save as well. Put down something for a rainy day, a buffer. And in addition to that, when you need financing, sometimes financial institutions, depending on the purpose of the loan, wouldn't give you 100% financing, right? So that savings would help you with your deposit that you need to add in order to qualify for that loan. And lastly, make sure that you make your payments. Keep your loan up to date. Don't let it get away from you. And if you see any signs of trouble, please speak to your financial advisor. So I want to leave those tips with you, and I hope that they were helpful. And don't keep them to yourselves. Share with your families, because you're building financially literate communities and a country. Thank you.
Thank you very much to the team of Annalisa and Janelle. And I want to share as well that the tip about running your transactions through your bank account actually would also help you with your accounting for your transactions, because I do not know of any bank now that doesn't have some type of facility to download transactions from your account into what we call a CSV file or an Excel file. And the first accounting software I would always tell people to invest in is an Excel sheet, or you don't need something fancy. Even if it's the Excel spreadsheet, one sheet is for what comes in and one sheet for what goes out. That at least allows you to make sure that you are tracking. And once you track, knowledge is power. You'll see where you're spending more than you need to, and you'll also see where you're actually earning income. So I think that those are good practical tips. So our final workshop, before we get to our Q&A, and I have been building up the questions for the shy persons in the audience here, is understanding now digital banking and financial technology. And we have Adrian Payne and German Abbott from RBC. Adrian is a business electronic officer, and German is a business electronic officer, and they'll tell us both about those two titles and what they do in the bank as they share with us understanding digital banking.
Well, I will be doing the presentation this evening. Jermaine is in the back. He would also, where needed, be assisting me with the Q&A at this point. I just want to thank everybody for inviting us to have the opportunity to speak to you guys. I also want to thank Janelle and Annalisa for the presentation they did just now. And it actually acts as a natural streamline into some of the points that I'm going to speak on this evening. So you heard about account opening. And naturally, as a service or a byproduct, additional product of opening accounts, you would also have digital banking services to be tied to those accounts. So with that being said, I just want to touch on this topic. I know most of you already would have been users, active users of digital banking. Some of you, hopefully not much, may need a little nudge. So I'm hoping that this conversation would help both of you, for those who are already using it, to have more insight on what other benefits you can derive. And for those of you who are slow to use it, would adopt the opportunities that are available to you. So I'll just begin with a brief understanding or definition of what digital banking is. So digital banking refers to the online management of financial services, allowing customers to perform transactions conveniently from their devices without the need for physical branches. So digital payments are what really are the instruments that run from digital banking. So digital payments would include, have some benefits, obviously, to the business owners like yourself. You could imagine that in this day and age, where everything is online, where everything is easily accessible in terms of your phones and everything, you want to be able to be in touch with your business, with your employees. You want to be able to manage your affairs effectively, whether you're at home, whether you're traveling, whether you're on the go. So some of the obvious benefits of having a digital banking access would be that, one, it saves you time and efficiency. Most of us have our mobile devices on us wherever we go. So with the quick pulling out of the device, we can go and log into our online banking, see exactly what we are at in terms of our funds, make sure that we can meet our commitments. So Janelle and Annalisa also spoke about cash flow. So obviously with the digital banking, you'll be able to reconcile and manage exactly what is needed. We do have persons like yourself and other clients who may have multiple business accounts, which you will separate for different functions and services. I know we have a number of accountants here, obviously. So I know accountants would usually tell you guys to separate and to have things following through so that'd be easier for their reporting. So we see that as an obvious benefit as well, being able to access and do those transfers that are required. So obviously, as we said earlier, it also enables you to have greater control and business continuity so that even if you're vacationing, you're doing something, you're taking care of family, you can still have an eye out on what the business is doing so you can manage your finances. And in terms of oversight, obviously, and it gives you greater oversight into the decision making on what is exactly required at the time, where you stand in your financial standing, and you're able to then execute all the functions to keep the business going effectively. All right, so in getting to that, digital banking and having full access of usage, we would have had somewhat of a journey to get to that point. I know that most of you guys, or some of you guys, would be so familiar with using the apps that are available to you, online banking and mobile banking, but we tend to forget sometimes the transition point of how we actually got to this stage. So I'll just briefly summarize what that was. So first off, when we started out many years ago, most of us would be familiar with the term online banking, which is still being used. The online banking at the time would have been kind of refined just to computers and laptops, but with the onset of smartphones and the increased memory and things that these smartphones can do now, naturally, we'd have been able to transition from just being able to access on the laptop or the desktop. And many persons were obviously able to access online banking, mobile banking, and therefore we saw many financial institutions going in the direction to offer apps and easy access to that. Now, not only in banking would we see that the mobile technology and digital technology would have enhanced how we operate and changed the atmosphere in which we operate. We see that with the digital banking and mobile banking usage, that additional access and other factors in terms of online access would have pushed clients to want to have more convenience, and many other businesses would have also, outside of the financial sector, would have also incorporated different platforms to also have what we would call digital transformation. And digital transformation is basically the access of any business, whether it's retail, whether it's service, any type of service that's being offered as a business owner or company, that interaction with clients to make it easier for them to do business, to increase your visibility, and how to do transaction and conduct business. All that is incorporated what we call digital transformation. So that would have been just a short journey map in how we move from online banking to mobile to transformation. Now, just a quick note on online banking, as the others had presented as well. With the account access and easy at our fingertips, we're able to actually send those financial statements to other persons, like the accountants, and we're able to have greater control of our personalized records. All right, so what does this really mean for us? I think the order of the slide may be slightly off, but you can leave it there. So for you guys here sitting as entrepreneurs, you'll be asking yourself, hey, yes, I'm hearing about digital banking. I already using it. What does this really mean for me to grow even further? So I think one of the things that we noticed coming out of COVID would have been persons who were kind of lagging behind in terms of digital banking adoption. They would have found themselves in somewhat of a bind in terms of the lockdowns and everything, even the bank. Of having a mobile device to do those pickups and everything. And then we saw also a greater upsurge in persons who would have been approaching the banking sector to have e-commerce capabilities. Because as we know, with e-commerce, which we'll touch on a little later, your business is always open, so things like restrictions and lockdowns wouldn't impact the business, and you're offering that extra convenience to the client. So fintech, we hear this term spoken about regularly. To some persons, it might throw you off a bit. It basically stands for financial technology, and everything we've just discussed to this point actually points in the direction of fintech. As I said, so even the access to digital banking, the mobile machines, e-commerce, even the ATM machines are all part of financial technology, and we can see the obvious effects of how this technology has improved the way that we do business. Other areas of fintech that we will more properly hear about in everyday commercials and advertisements and discussions on television and what's not will be more along the line of e-wallets. And I know that the government is coming on board with a system next year. I think it's going to have some phases. Can't speak much on it, but part of that will also incorporate at some point e-wallet. Another important area of digital banking, financial technology or fintech, would be the ability in the banking sector, the ability for consumers to interact with the bank for a basic level of just even reaching out to inquire about a loan. Some banks have gone, a step further in offering additional things other than just the initial contact, but we are seeing how fintech is actually transforming the local sector, even from the point of view of personal financing and business financing. Okay, so we touched on it just a moment ago, merchant services. So fintech is a very critical part of transformation when it comes to merchant services. Merchant services basically encompass the acceptance of card payments from customers. It can take the form of in-person transactions. It could also take the form of e-commerce transactions. So fintech basically drives a lot of what the convenience that we as consumers and you as business owners would be allowed to give to your clients in terms of easy access. A lot of this is driven into that end, and it creates a digital marketplace for buying and selling. Okay, so I just break down some of the aspects of merchant services. So I just mentioned one of those aspects would be the card reader machines. By now, everyone here has probably used their debit card, their credit card on a day-to-day basis. So we are quite familiar with the option of being able to tap our card, swipe, insert. The card machine industry has been so dynamic that I would say from my position that we do find persons who would have been able to survive, so to speak, without having a machine available or coming in droves to get those services, because as a consumer, as you know, consumers dictate the market, obviously. You as consumers and we as consumers want the additional convenience when we go out. We don't want to have to go to the ATM. We want to save time. We want to also do safer transactions. So card machines is really driving a lot of this digital transformation that we see today, and is very important in terms of you guys as consumers and owners to have that option available to your clients. So we see the types of card machines, card reader devices, including swipe, chip, and contactless. Some of the benefits would include quick transactions, enhancing customer satisfaction, and streamlining the checkout experience. Of course, as I said, the card machines provide that added security to both the consumer and to the merchant by basically not having as much cash available on hand. Okay, so just touch a bit on e-commerce, and this is actually, I guess, one of the more, I can say that twofold. We still have having a lot of interest with e-commerce. I still think that there is some work to be done in terms of educating the wider public and the business persons about the options that we do have available. I think to some degree, e-commerce is still somewhat of a taboo subject. Some persons may think the financial sector, the banking sector here needs to get with it. We don't have the options available. And I just here to just highlight some of those points and to let you guys know that that is not quite true. We do have a vibrant e-commerce infrastructure here locally, and it's growing, but there's some work that can still be done. So e-commerce basically is facilitating online payments through credit card transactions. This would differ obviously to digital banking, where you're using the digital platform, the online platform, to do payments and receive payments. With the e-commerce transactions, your persons are using their card to facilitate those transactions directly. So to do this, in connecting to to do online e-commerce transactions, you would have to have what we call a payment gateway, right? So the bank facilitates those payment gateways for you as business owners. There will be some level of discussion as to what exactly the nature of business that you're conducting, and what type of technology you're using, if it's going to be through a website, if it's going to be more through a service that you're sending a payment request. So there's some level of discussion that we will have with you to confirm what you're doing, and then to be able to offer you the particular product that will give direct benefit for you. In that vein, we do acknowledge, and we do know that there are a lot of persons who do, on the retail side, would need a checkout experience whereby persons can check out. It doesn't have to necessarily have too much interaction with the client, type of an automated service. So there are services available as well to facilitate that. But even if you're not doing you're not a retail merchant, and I know that most of you probably aren't. You probably are more, or half of you at least, probably in the service industry. So you may not have the need to have a website. We do have services for you. Things like you can send out payment links, and that does not require a website. So we have a number of persons in the service sectors that do not require it. They can still benefit with a website, but they may want to have that direct interaction with the client, and they want to be able, at that point, once they've confirmed interest, to basically facilitate payment. We actually realize that a lot of clients, especially in the hospitality industry, many guests I've heard from the business end actually do prefer to confirm certain bookings, whether it's car rentals, hotels, transportation services. They do prefer to have payment done before they get here, because they want to be able to make sure that everything runs smoothly with the trip. And then for the hospitality person, whether it's a taxi person or not, or car rental company, having that option to take payment actually really does turn over the business really well, and it will confirm that once the person has paid those deposits, you kind of confirm that you will have the business on the ground. So it reduces cancellations and what's not. So it's a very exciting and growing sector, and is really evident as part of the digital transformation happening right now, especially since we're in the season. So just one last point on the payment link. So one of the things outside of the infrastructure of persons who may not need or want to have a website as yet is that the payment link actually is quite also very cost effective. So if you're not certain as to whether you want to make a full plunge into investing in a website, because it can be a bit costly in terms of having these servers available to make sure that there's less downtime and the security features you would need, the web development and everything, we find that using the payment link option can be very useful for you, because it gives you, it might be a full functioning use for you. You may not need a website, but it also gives you an introduction into how smoothly these payments can run and how it can really benefit the business. So, so far we see, I hope we see, some of the benefits of digital transformation, merchant services, and financial technology. So I would say that if we had to put all this together, merchant services, fintech, I would say that the whole takeaway today or this evening would basically be for digital transformation. And I would just summarize some of the benefits before we go on the digital transformation and introduce a very important aspect that is not quite talked about as much. So you can see on the slide, it will help you guys to streamline transactions, enhance customer experience by reducing wait times and errors during processes. Enhance customer service. Utilizing all these available technology will allow you to have full range access to digital banking with card readers and e-commerce, and allows the business to provide better customer service, offering customers more payment methods and quicker transaction resolutions to improve satisfaction. Now, finally, an area that I think can be very, very beneficial, and I think it is a futuristic area that even if you're not a business owner that you can lean in on for greater insights, would be analytics. So I would say that analytics is something that may be more powered, is more evident, or has more capability if you're doing e-commerce, even if you're doing the payment link. But at the more general level, we know that when you have a website and you can take payment on that website, even if it's not a payment website, you can deduct a lot of insights from the traffic that comes through the website in terms of demographics, who logged in, who stayed on which page, which products they were interested in. And we find that outside of the website itself, if you're using certain booking platforms, or even at the gateway level, where we speak about where the banks provide the technology for you to be able to do online payments. At every level, there is some level of analytics that can be derived from especially e-commerce businesses. So even had a conversation, two conversations recently, one with a taxi operator and the other with a hotelier, a small hotelier. And they were able, from the hotelier's point of view, the platforms that they use for booking and everything, they were able to predict and see historical trends, see how they can put themselves at a competitive advantage by just investing or leveraging. You may not even have to invest. Some of these tools are actually available as it is. I think sometimes it's just a matter of people looking to delve into that. You can get a lot of insight just from the website or the booking tools. If you do have that on your website, that you can see how the business is going, what went well, what went wrong, where are your high points, where are your low points. Also, even with the payment link option, you can do a reporting that tells you your higher activity, your lower bookings in terms of season, and you can also, I believe, based on that and your customer intelligence, derive where you're doing best, what periods of time you're doing best. So analytics is a very important part, in my opinion, in our opinion, of digital transformation, and it can be leveraged quite easily with the other tools that we discussed this evening. So I hope that brings me to the end of my presentation. I hope you guys were able to get some insights that can benefit your business, and we're looking forward to the remaining session.
Thank you very much, Adrian. And we'll now segue into our Q&A, and I'm actually going to move over to use the microphone in the back, and I will move throughout the crowd. And what I'll do is invite Nikita and Tamara, if they wouldn't be so kind, to join us up here. What we're going to do is, Nikita and Renata, we are going to probably handle first questions on the personal side. And then afterwards, we can do small business, and then following that, we can have any questions for Adrian. So do we have any questions for our friends? And Mr. Hope has a question.
Thank you. I'm not Mr. Hope, I'm Hallam Hope, actually. My question, I have three really, really quick questions. One relates to mortgages and insurance, and the other two relates to Nikita and her company. So my first question, Nikita, is, could you tell me what is the leading asset in the world? You mentioned investing, achieving a goal of a rate of return, yeah? Investing as a means of achieving a goal of rate of return, yeah? I assume you mean a very high rate of return. Could you tell me what is the leading asset class in the world?
I believe the leading asset probably would be, or what we would call what is most valuable or most productive asset, relies on the revenue that you generate.
No, I'm talking about the asset class. I'm talking about Is it NASDAQ? Is it S&P 500? Is it gold? Is it oil? What is the asset class, leading asset class in the world?
Right. Yes.
That's okay. Bring all the help you need.
Yeah. Hi, I'm Colleen Sudat. I'm the Managing Director of Republic Bank.
Hi, okay.
Hi. So at this point, I'm not going to guide you in terms of the leading asset class. That's widely understood. What we guide customers on...
It is widely understood.
Yeah, it's on... But it depends on your risk appetite and tolerance. There are customers that are very risk averse.
But Nikita said achieving a high rate of return, so I want to
please.
know what's the asset class that
Yeah.
will achieve the highest possible rate of return.
Well, so it depends on what market you want to get into.
Sorry, my
There are
apologies.
various markets that you can. So you can get into the US market where you have stocks and bonds, US treasuries and different things that you can invest on. You can go into the European market, but again, it depends on your risk tolerance. And while we are very mindful in how we guide that information, it's that everyone's risk tolerance is different. What I will say generally in Barbados that we see is that we have people who would like to preserve their principal. And that's important. Right. And so you look for a risk class where a person's principal is preserved. But again, it depends on who you're dealing with. Right. So we're very careful with the advice that we give on this type of topic.
I understand. One more question. All right.
Sure, thanks.
I was going to ask about infinity banking, but I'm told I can only ask one more question.
Sure.
So I'm not going to ask about infinity banking and mortgages and that sort of thing. My question is this. I have a friend in St. Philip, and she doesn't trust banks because she is very frugal, works very hard, and her approach to saving is that she has 2 shoeboxes. Mm-hmm. So after she's paid her bills, one shoebox goes to that rainy day that we heard about, and the other shoebox goes to investing. The challenge is that she doesn't know where to invest because if she puts some money on the bank, the cost of it is going to rise, yeah? The cost of living is going to keep rising, which you heard earlier, right? But she's not going to get any return on investment for the money that she put on the bank, right? So she's not so clear where to invest. In fact, she doesn't think she's going to make any money at all because in some cases she may get hit with bank fees. So when she puts money on the bank, she may actually get back less money than she put on. You with me?
Yes.
Okay. So I'm telling her, I think, really, I'm not going to call her name, I really think that you can achieve a minimum of 10%, which would cover your rising cost of living. Let's assume that cost of living is below 10%, that you can get a return on investment of that. So my question is, if she comes to you and says, well, listen, I have an option that I can get a return on investment of 10 to 20% per annum, what would be your response?
Well, I will ask her, what is it? Because that's quite high, a 10 to 20%.
Are you saying it doesn't exist? It's not possible?
Again, I said, I will ask her.
Thank you. Thank you.
Thank you, Mr. Hope. We do have a question right here from this young lady.
Hi, my name is Roberta.
Let me allow my colleagues to come back to the podium. Yes, go ahead.
Okay, hi. Yes, I have a question about personal investment. I want to know what are the investment instruments or options available if you keep in mind inflation. So say inflation for Barbados is projected to be 2.5% in 2026, and you want to make an investment right now that keeps you above or in line with the inflation. I'd love some ideas of what you can actually do.
Yeah. I will say, let me come back here. It's almost like what we said before. It depends on what you want as an end game. There are instruments where your principal isn't as well preserved, and of course the return is higher. It may require a little bit more monitoring because there are fluctuating rates almost on a weekly or a monthly basis. So something like an annuity or different types of things tied to bonds and stocks, right? But then I would say average-wise, which is a less return, where you have more capital preservation, less volatility, you may have to then look at something with some sub 2%, But I will say, if you are interested, certainly come in. We could kind of work with you and see where your risk appetite belongs and guide accordingly. There is something for everyone, but again, I come back to say it's what you as a client or an individual are looking for from a risk perspective. Some persons younger in their career path, they may be willing, they want a return, they will have the appetite. They also have, as my colleague from RBC was mentioning, they have the digital experience to be able to monitor things on a more ongoing basis. Because a lot of these stock bonds, instruments, the performance is, it's transparent via some sort of online portal or something like that, right? But then you may have a client that they don't want that administrative burden. They sometimes don't know how to access that kind of information, and so their investing needs are different. And so we have to be, as bankers, all of us in the banking industry, we're very mindful of that to ensure that we match the right product with the right client.
If we don't have any other questions, I do have some clarifying questions, ladies. You made reference to every data, which is actually probably the first time I've heard of every data. And maybe what you could do is just share with us a bit more information about who that organization is, how does it get the data to compile and create a credit history for us as a customer. And you did touch on it's not just obviously interaction with the bank, but it's also the utility payments, et cetera. So is it possible to give us some more information about that?
Sure. Thank you for your question. So when we are doing an assessment on your profile is built based on how you repay debt. Every data, there are a number of credit bureaus who collect information from the different financial entities that would give you credit. And based on how you service those debts, that information is collated, collected over a period. Now, as I said, it's not just loans and credit cards and so on, but hire purchases. It's actually who subscribes to them. They're going through a period of onboarding different FIs, financial institutions, and as they collate that information and they sign on to having their information captured, and you as a client as well have to agree to allow us to conduct credit checks on you for data privacy reasons. Once you agree, because that's all part and parcel of doing the financial assessment, once you agree to that, then they are able to release the information to us. And that information is collated over a period of time. I can't say how long they have done this for, but I can say every data as well as credit info, those two entities are the credit bureaus that we subscribe to that provide us with the information necessary to do our assessment.
Okay, and so therefore there is a process of providing a permission before they receive your information.
Definitely, yes.
Okay. You did touch on the acronym, the TDSR, which I know what it means, but maybe just again, for those who are not as financial savvy, break down that particular ratio again and why it is important for you.
Okay, so in layman terms, TDSR is debt servicing ratio, and it's basically your capacity based on your gross income that you can carry as monthly payments on your debt. And what we do, we take the gross and we multiply that by 40% to see how much your monthly payment should total, basically, that you can handle comfortably. When we look at all of your monthly payments and we add those together, those should not exceed that 40% because that's your threshold. What we do is we look at all the monthly payments you'll be making, hire purchase, credit cards, loans, charge accounts, and so on, and we see if we can offer you a loan. When we consolidate that debt at a lower rate, the total monthly payment would be less than what you're paying collectively across all of those different payments. In so doing, if we're able to give you a smaller payment by consolidating debt, it means that you will increase your disposable income, and that will increase the quality of life because then you get back funds in pocket to do other things, to meet other obligations that you may want to meet, both recreational and otherwise, including being able to save comfortably. Because a lot of the reasons that persons are not able to save comfortably is because they're overextended in paying debts, whether it's hire purchase, charge accounts, and what you may not know a lot of times, some of those debts carry very high interest rates. It's good to come when we have campaigns which are ongoing all throughout the year, and not just Republic Bank, but across the board. And at those times, we have a lower rate. So if you consolidate at those times, it means that you are likely to have a smaller payment than what you're paying across all the different facilities that you may be trying to service monthly.
Yes, I just have one question.
Sure.
Some guidance. You would have mentioned about mortgage,
Yes.
and you had a mortgage, and now you are building your home. And you would have mentioned about if you do amendments, and you should really stick to the original contract plan, right?
Yes.
But we know that things do happen, and you might want to make an adjustment. I just think it may be good to see what is the process if you want to do that adjustment. What should you do, or is it possible?
Right. So I would say it's always great to have a conversation with your financial institution before you go ahead and do anything. Many people go ahead because they have funds in hand, they want to meet an immediate need, they make the adjustment and then come to us after. I think when coming to us first to have a discussion allows us to help you to make an informed decision and to see if we are able to allow it to happen. Not only from our perspective, but in terms of even for construction. A lot of the times, not a lot of times, you have to have town and country planning approval. If you decide to make an adjustment that goes outside of the footprint that has been approved, it means that you have to wait for town and country planning to approve that change. And there's no guarantee that they will. So to answer your question, it's best to come back to the bank first to have that discussion, and once we can facilitate, we will. Because we are here to help you, not to say, you can't do this or you can't do that. We're here to see how we can best assist. So it's always best to have that open discussion.
If there aren't any other questions, yes? Oh, sorry, Marcia.
Hi, good night. In regards to the insurance policies, would this more so be term insurance versus whole life? Which type of policy would be best to cover the property?
Right. So for covering the property, you have an option of doing mortgage protection insurance or life insurance. It's really your choice. Life insurance oftentimes has a component where it has a savings component, and you benefit not only from in the event of death, but also during life if you have a disability or something and you are you lose a limb, you're still paid a percentage. Or if you're just looking at the premium and you have other life insurance policies, and this particular policy you want to take out is for the sole purpose of covering the mortgage. A lot of times people may have a life insurance already, and that's for their family to benefit, and they just take out the mortgage protection, which is like a term policy, or the life insurance for the sole purpose of the smaller premium of covering their mortgage. So it's really your decision, and I would say that it's best to have that discussion with an insurance agent who can best guide you in terms of premiums and what the benefits are for the various types of options that you have. The bank's interest is really to ensure that you protect yourself, that should this eventuality occur, that you are adequately covered, and not that, sometimes people say, oh, I'm not paying another premium because I have a life insurance already. But then when the situation occurs, they regret not getting another policy because then their family doesn't benefit from the payout. The bank is going to, obviously the insurance is going to pay the bank to close your facility, but the persons that are left behind will not benefit from that sum assured payout. So in the short term, it may seem easier just to use what you have already, but when you weigh all the options, they may also be beneficial to you, if you can afford it, to have a separate policy to cover the mortgage.
In the event, not to think negative, but life happens.
Yes.
In the event of default, right? You hear the horror stories of persons where they might miss a payment or two, something happens. And at what point, right, would the courts get involved? At what point would that person feel like, I've had situations where I've spoken with persons who experience hardship, and we know that since COVID, right, I would tell you that there are some people who are still trying to catch themselves since COVID, right, while dealing with today's stuff. Right. So in the event where persons go through hardships or they're trying to still, overcome what happened back then, at which point would a court, the courts get involved, because the conversations tend to start between the person and the bank.
Right.
When a court is involved, then it's between lawyers. So when would that trigger be pulled, right? Just to answer that part, and just to add as well, that there are instances where people feel like the humanization in regards to banking is kind of fading, where they don't feel like if they're talking to people, they feel like if they're, in a system, if you understand what I'm talking about. So I just want to understand, how is that process delicately dealt with?
Yes, thank you.
Let me help you. So thanks for the question. In the first one, in the event of default, the banks have a responsibility regulatory-wise. So any loan 90 days in arrears, as per the central bank's regulation, that loan has to be noted as impaired, 90 days, either principal or interest or both, right? And that loan has to be noted as an impaired loan. Now, it doesn't necessarily mean when the loan goes into impairment that you are automatically thrown to the courts and that sort of thing. Even on 1 day past due, or even up to that 1 to 89 day past due time, conversations are happening, reminders. What we normally find, and this is reality, people sometimes, a lot of Caribbean people, I've worked throughout the Caribbean. Caribbean people are very attached to their homes, even though sometimes it doesn't make sense. Sometimes you see and you have conversations, I've had conversations with clients where it's really to their detriment to keep the home. It's costing them too much. They can't afford to keep the home. But they're trying. And I think generally, I can speak for all of my colleagues, right, as part of Bankers Association, we really try to have those conversations to understand where the clients are coming from, but more so, and we spoke about the debt service part, what the client can afford. Because what happens is that at the point of origination, when we calculated your debt service, something may have changed. You lost your job, COVID, a lot of times even someone became ill, and you diverted those funds to that person's medical bills. That's what we see every day, and we know that to be a reality. So we try to have the right conversations. Sometimes it means that we have no choice when we have those conversations, that we do have to now take legal action. And that really, I will say, I don't want to give you a timeline, but that normally does not happen before 3 months. It actually even happens sometimes in reality far after 3 months. But I will say, as per regulation, that normally doesn't happen before 3 months of the note, the first day of the loan being in arrears. Where you spoke about the dehumanization of banking, it's sometimes the reality. I will tell you, I guess this is my age now. When I joined the bank, we had operators call the bank. You could say, can I speak to so-and-so? And you got a voice. Now it has no voice. Nobody picks up the phone. You have to know an extension. I'm aware it's not only us, it's what industry is like now. As much as possible, we try to keep that human element. One of the big things that all banks, and not just speaking for Republic Bank, one of the things that we speak about collectively is service and relationship, and we really try to uphold that. I know that, and I've been to the banking halls, I know that's not always what you experience as clients, I'm aware, but I will say for the most part, we try our very best to help. And I do see enough commendations coming in on a daily basis where you have someone who really were at their wits' end, they bounced up a banking officer, and that person helped them through a very difficult time. So I see enough of that to know that there is some hope. Does it happen 100% of the time? No. But does it happen some of the time? I will say yes. And we continue to try for sure. Thank you.
So I actually have one last final question. And Carlene, maybe you might be the best person to speak to this.
I just come by chance. And
I know, and I'm so happy that you came. So thank you. And it comes back to the psyche around saving and budgeting and really living within your means. Mm-hmm. You talk about that Caribbean identity being linked to owning a piece of the rock and having your own house. But again, there is still that, can I afford it? And that there's a stigma when that can't, the affordability is not there, and success no longer has met that definition. And what can we do or help community with regards to this? Because I think that this understanding about how you go about saving We use this rule of thumb of 10%, which is well known, but in general, how can we help persons understand it's a learned behavior that you need to start, and you get better at it. You're not perfect at it at the beginning, but it's important because. Maybe you can add something for
sure.
that.
And I'll tell you that as generations evolve, different things come into our eyesight. So social media has brought a whole new sensitivity to what's out there. Long ago, to view a car, you come out of school, you want to buy a car, you might go to buy a used car or, something a little older until you could afford it. But social media has created this urgency and need for people. And I mean, don't get me wrong, social media has its benefits, but it brings a sense of, this Carlene's version, right? Not Republican probably, but keeping up with the Joneses. I must have this, I must have that, because, I went to school with this person, and you know what? They have this type of car already, and probably I should. But what I will always say, there's a sense of responsibility and accountability on your side, that you have to know what you could afford. That is up to you, because that person paycheck, you don't know what it is, and many times you don't even know what they're struggling to make, right? Be responsible for your finances. And there are easy ways. Even if you don't have that saving ability in yourself, you come to the bank and say you want to set up a standing order. I get $5 a month. I want to put $1 to a pension, $1 to this, $1. We could help you do that. And when your salary comes in, your money sweeps to your investment accounts or your saving accounts, and you spend what is left. That's planned saving. And sometimes we need that until we can build our own discipline to know, listen, I want to save for travel. Who knows, right? I want to save for travel. I can use my investments for that. It's my little extra money now that I have in my account that I will save a little bit every month and probably have that trip that I want, however long it takes. We do not know, and I mean, in the Caribbean, I will say, you don't know job volatility, pandemics, natural disaster, climate change. There are a number of things that could change our ability to continue to earn our income. And so we don't have the crystal ball, but certainly the person or persons who saved and have those investment instruments are able to call on them much quicker and have that little bit of a buffer and a safety net more than someone who hasn't. Sometimes we're young, and I'm not beating up on the youth, right? But I'm just saying, sometimes we're young and we feel, we have this whole life to work in front of us. And it's true for the most part, but things happen. Sometimes, again, as I say, a family member gets ill and you have your responsibilities to your family and you don't plan for those things. So I would always say, as a young person, start your saving early and get that discipline early. And as I said, there are things that you don't even have to come into the bank. There are standing orders you could do online to say $5 going here or whatever every month. And so you use what's left. Yeah.
Good evening. My name is Irene. I just want to tell you about an old-fashioned system that our grandparents used to use in terms of acquiring a house. They would have started with one roof, a shed roof, and then they would go to the lumber company and they would get some materials and they would build on another roof and they would go back and they would get another roof. Now, what I am saying is that Rome wasn't built in a day. If you envisage a big, beautiful house, it is all right to go to town and country planning with your beautiful plan, but get the plan done in stages. Because for me personally, I would not qualify for the house that I have now, right, on the salary, a teacher's salary. So what I did was to get the plan drawn in about 4 stages. So I could live in a part that is built quite good, quite comfortable. And then when more money comes, another section, and another section, another section. And another thing that I would like to tell, especially young people, is that if you want to save, don't visit Chefette every day. Learn to cook. Carry to work your food. Pick up tamarinds and make tamarind drink. Get cherries and make cherry drink. Don't buy the bombs. They're not good for you either. So you need to take care of your finances in that way, as well as take care of your health. And if you have children like me, I was a single parent, went through divorce. I had 4 children, and the children knew that at Christmas time, there will be no presents because we couldn't afford it this Christmas. And they were understanding. The children knew that they weren't going to get elaborate parties, right? And in terms of getting now a car, when my car started to give trouble, my children were going to school in St. Michael, and I was teaching in St. Joseph. So the car, I did not qualify for the loan at the credit union, but I begged. I told them, the car is not a luxury. I know it will be aesthetically pleasing, but it is a necessity for me to get to work and to get my children to school. That was important, and they understood. So I got the loan, paid for it, never missed a month, and it's all about commitment and knowing what is important for you. And if you have your goals, keep focused. It is easy for your friend to tell you, let's go to this fete, let's go to this cruise, and when you go to the fete and the cruise, you want the latest shoes, the latest clothes. You don't need that. Even if you're going to a wedding, you don't have to buy a new outfit. So my advice for people, young people, old people might understand or they might not, but my advice is to be focused on what you want and you will get there.
Thank you so much. She's doing half the job for us tonight. One last question for our friends at Republic, because they've been standing for a while. Thank you.
My question, good night, everyone. My question relates to, I'm thinking of a scenario where you get a mortgage and you purchase a home or an entity that you initially intend to live in, but the opportunity becomes available to turn it into a business in terms of Airbnb, for example. Is there, are you crossing lines when you move from the residential, I don't know the terminology, mortgage to what would now be a business? Or are there things that you should be doing to make sure that you stay within, even though the idea is to turn into a business in order to be able to expedite the payments and so on?
And I think the general theme, good question, thank you, because that's very prevalent now in Barbados. We actually run, I can speak Republic, we run a package now where people can own a second home for business purposes, because there are a lot of rental opportunities that exist here now, right? But to answer your question directly, again, it comes back to what we've been saying. Come and have a discussion, because even if the mortgage in its current state, home finished, mortgage running, right? Even if we see that there is an ability to repay the mortgage, where it becomes a little tricky is where you're putting the funds. Because now you have moved from a person with a personal account and you've moved into a business. And so you have to now deposit those funds into a business account. And you can't now mix commingling. You have heard those words. You can't now mix business funds with personal resources. So again, come and get the advice to understand where you're at, what needs to be done. If the mortgage is already running, I highly doubt anything has to be done on that part. But we now need to have the records that this property is a business property earning rental income, and the proceeds of that goes into a specific account. We spoke a little bit about it where I think we did Or RBC mentioned that, sometimes you see these expenses, but they're being paid in cash and all of those. So it's important that the funds from this business hit an account so that there is transparency in running the business. Yeah? Good.
Thank you very much, ladies. I
Thank you all
appreciate
very,
your
very much.
patience
Thank
with our questions. Annalisa and Janelle, if you would be so kind to join us. Do we have any questions on the small business aspect for these ladies? And yes, sir? Ladies, please. We have a question right here.
Pleasant good night to everyone. My name is Edwin Lawrence. Simple question. Scenario. Small business owner. No financial statements, just projections. I've come to you. I said I wanted $70,000 to purchase some equipment that would then enable me to make money. I said to you that the turnover will be possibly based on the projections and everything, in 3 months. Can I ask for a moratorium or anything, a waiver or anything like that? And would you give me the loan based on those conditions?
So to clarify, do you mean a moratorium, sir, on the repayment? Yes, given that the cash flows are not coming immediately.
Yeah, so we always look at your financial statements, as you mentioned. We look at the credit on a holistic point of view. And for instance, as you said, if the loan isn't generating any income at the time, for sure we would go ahead and seek exception for a moratorium for you until you get up and running. And then that facility can generate some income that obviously it can repay the debt. So it is something that we look at as well.
So to clarify the moratorium, right? We still expect that you can pay interest.
You need to bring the mic a little further down. Sorry.
We still expect that you can pay interest on the loan, but that blended payment, we would give the exception for it to come 3 months, 6 months, based on your needs. So yes, it's possible, and I would encourage you to talk to the bank about it. Yeah.
So I wanted to throw a little bit more into that scenario.
Sure.
Because our friend spoke about not having financials, so I'm assuming he's only using projections. When you say you're looking for, you're looking at financials, you're looking at those projections, but what is actually going to give you comfort over those projections?
Mm-hmm.
What else are you looking at with regards to his story that makes you comfortable to offer him not only the loan but the moratorium?
Mm-hmm. So we would look at whether if this is an existing business or if it's something new that you're starting up. Of course, remember I talked earlier about your character and what experience you have in the business. And something important that we mention is the deposit of the business flows into the account. We could also look at your bank account to see how the business has been doing. If it's a completely new operation, of course, there's a little bit more risk in that, and we will have to assess those needs. Also, as Janelle had mentioned, we can also provide you with a template where you can look. We can look at a simple profit and loss statement to give us an idea on of the business activity, if it's an existing business, and if you need more guidance, you can reach out to someone from ICAB to guide you as well. completely new business.
Yeah,
well,
so let's throw another kick into the scenario. He used to
Yeah.
be employed.
Right.
He said, okay, no, I think I could do this on my own, but I need an asset in order to make it work. So he's coming to you
Yeah.
saying, I would like to borrow. And I would assume at this point in time, because he doesn't necessarily have that track record, maybe other than the fact that he has some familiarity, maybe he worked with somebody else that did this line of work, that's where his credibility is coming from.
Yeah.
So maybe this is a good segue for me to ask my question, because I assume that the bank still wants some collateral.
Of course.
So then let's talk about the enhanced
Credit.
guarantee program with the IDB, because that was given as an example of a way to get collateral. So if you don't have the asset yet, you're now about to buy the asset, and I'm assuming you will also have a bill of sale at some point. But how do you utilize that facility, and how could someone like my friend here take advantage of that?
Sure. So let's use, sorry, you said your name was?
Edwin.
Edwin. So Edwin, a new business venture on the whole, we have to do a more in-depth analysis to be comfortable with the risk that we're taking on, right? But let's say that you have an existing business. Let's just say that you have an existing business and you want to get some equipment, and the equipment cost is $70,000. So typically what the bank does is lend you 80% of that $70,000 and you put in the rest, right? Because the bank doesn't fund 100%. We assess your debt service ratio. Once you pass those, we don't want to hold a bill of sale on this equipment depending on what the equipment is. We go to the central bank and we would utilize the enhanced central bank credit guarantee, which secures 80% of the bank's loan to you. So it secures 80%. So in an event of a default, we can claim on that central bank guarantee. And on the central bank guarantee, the bank has an obligation to report on your loan every quarter. And there's a small, very tiny interest rate that you, the customer, pays for the convenience of that credit guarantee. But it's sometimes less than what you would pay for legal fees. So we find that it's a really, really useful instrument. I'm really happy to hear, both of us, that the IDB has approved another $100 million, right, for this, because it's been very, very beneficial to small businesses.
So it's the familiarity with that facility that needs to be increased, because it sounds as if Edwin goes to the bank and says, I don't have collateral, you ideally don't want to hold the bill of sale, maybe because of the type of asset, he can say to you, can we take advantage of that facility?
Yeah. So usually your business banker would guide you as to it's financial advice, right? We would determine what is the best collateral for, depending on what your purchase is or what you're using the proceeds of the fund for.
Okay, so we have our agent, Damien has one first, Marcia, and then I'll come to you.
Yeah. So just a question. It just came to, a question. So we're dealing with small business personnel, right? And they're coming to you for a loan, and they may be new, right? So maybe they have those projections and what's not. One of the things that I realize, especially with small business owners, is that generally they don't have the financial expertise really to record and keep good business records, right? And maybe it's not their fault because, they are in business to do their main thing, right? So the skill of finance is not really their skill. So that may be a skill for a bookkeeper or what you would call an accountant and what's not. I'm just wondering, when they come to you for a loan, is there guidance or is there a possibility that they can build in the costs maybe of a record keeper or an accountant, especially in those primitive or those embryonic years of their business, so that when they start, they don't have to really worry about that. They can have sound financial record and governance and that expertise, which may allow them, first of all, to concentrate on the main thing. And obviously it starts a picture of good financial record. So I'm just wondering if that is basically possible to build into the same loan that they would have, and if guidance is given for something like that.
Yeah, sure. So just a type of loan facility that banks usually like to use for day-to-day operation is either a working capital line for small businesses or an overdraft facility, right? For somebody who is now starting up, again, we would want to assess that business some more and see what is their existing, how much they have in savings and all of that, and what is their plan. It is not that the banks don't want to fund new ventures. I'll give you an example, and this has happened in truth. 2 doctors leave a practice, and they want to start off something on their own. And they give us a projection of what they expect to earn based on what they were earning before. And the bank would be able to support something like that. Somebody who doesn't have that financial knowledge should, and I agree, speak with like an accountant or somebody with the ICAB for that financial guidance. And the bank would also try its best to support that client and guide them in the right direction. So yes, Damien, those are things that we can look at.
Hi, good night again.
Yeah,
Oh,
and if I could also add to Damien, it's sessions like these that provide education for the public. And in my field, when I was in the small business space, what I would try to do is from the inception when that client opens an account, I give that piece of advice. Please start keeping good financial records from day one. And I find that helps because we don't want the client to walk away and then 2 years later they're back with us. They have an account for 2 years and then they have nothing to show. So honestly, we start the educational process from that inception, from the time we meet the client. And it's sessions like these two that will help to educate the public as well.
Hi, so I have 2 questions for you. In regards to the bank account opening process, I know the word quick was in one of those statements in that presentation, but we know, some of us know, that is not always the case in regards to it being a quick process. There are persons who will submit everything they have to submit, but then there's a lag in regards to the actual account opening. Is there, you know you can only speak for RBC, but is there a unit particularly for small businesses, whereas that they're again coming back to the human side, where there is someone that can actually walk you through the process of, some things on the websites, you can, not on all banks, I got you checked, but on some of the websites, there are some guidelines in regards to what you can do, but I find there's nothing really dedicated because a lot of the questions come, I'm not sure what my steps are, I don't know how to do something. So I'm really thankful for sessions such as these here, as we have tonight, and I hope it is the beginning of something that it will continue. But what is, in regards to your opening account process, what is your timeline? And I don't want to put you on the spot, but I just did. But what is your timeline in regards to opening an account with RBC? And if there is a hiccup in that process, then how is that communicated? Is the correspondence via email? Does someone get a call? How does that work?
Okay, so as you said, I could only speak for RBC. So currently we have a team dedicated to business account opening, a team of approximately 5 persons. And the process can take anything. Once you have all the documents that we have advised you to get for that account, I could say that that process could probably be completed in under 2 weeks. Usually what we would do, we would send out the forms to the client via email. This is the application form. And if the client is really tech savvy, they will get that form back to us in quick succession. If we find that the client is having challenges though, we would set an appointment and get that client to come in, because it doesn't make sense having the back and forth. I can't understand this. There's some people that can do it in one go, and that's fine. Then there's some that can't. So we have the facility where we actually set an appointment and the person can come in. So the length of time too also vary based on the work, the load in terms of how many applications we have. Sometimes we have some crazy months or periods where we have plenty applications in. So in a time like that, obviously it would take a little longer. But for the most part, we can get that account open for you in under 2 weeks.
And I would say generally to open small business accounts is much more documents that you have to go through, especially if it's an existing business. You have to make sure that your annual returns are filing with KIPOR. Now Business Barbados is also up to date. So that would also affect the turnaround time in getting the account open.
Okay, thank you, ladies. As a sub point to that, and I'm real sorry for being legal tonight. In regards to the account opening, if it's a situation where someone, let's say, registers a business but has not been active, in regards to the documentation, the projections, let's say the person, there are some persons who might register the business, let's say 5 years, but they did not do anything in the business. Maybe they have a 9 to 5. But then they decide to start. Would it still be the projections for them in the beginning, based on the...
Yes, absolutely.
Oh, okay.
Because you don't have any historical
Right.
data. So we would start, like, for instance, you come to us today, we can probably start your projections from December 1st going forward right to the end of November. So we give you the spreadsheet, you just plug in the figures, you give us an idea of what your business is looking to generate, how it's looking to perform. So absolutely, if you have not been operating, projections will still be applicable in this instance.
Okay, great. And I'm ending now, Lisa. Sorry, I love sessions like these. But no, you don't get bankers every day. So what I want to add as well too in regards to the financial statement. So with businesses, I find a lot of people, we still have that system of the book. Persons like to use the book. Then Lisa mentioned about Excel as well. But what is your preferred method of receiving information in regards now to your financial statements now? Is it better to use an accounting software tool that would be able to generate those reports for you, and that would be easier for you then to review versus having Excel sheets that might have multiple tabs? I know we can't use a physical book, no one has time to flip pages, but what is your preferred method of receiving that information?
Okay, so in 2025, our preferred method is having that app or QuickBooks or whatever program you're using that can generate that statement. Because as you can understand, we're dealing with applications day in and day out. So we want the turnaround to be quick as well for the client. Imagine us have to go through all those tabs and add up everything. When are we going to get around to you? So in 2025, yes, we do prefer if you can find an app, and maybe one of the ICAB members could probably share with the small business community what's out there. But we do see clients coming to us with management accounts that have been spat out with an app and QuickBooks and so on. So as Anna would have mentioned earlier in her presentation as well, for small facilities, management accounts is perfect. We don't need audited, nor we don't need accountant prepared statements. You're welcome.
All right.
And just one thing I just wanted to clarify for the gentleman there before you go away, in terms of the central bank guarantee. I know you keep talking about small business. So we just wanted to share with you, though, that the central bank guarantee is for businesses that are incorporated, unfortunately, at this time. So even if you are a sole trader,
you wouldn't be able to benefit from that at the present time, but for sure, you can eventually graduate to the stage of incorporation. Just wanted to share that with you.
Good night.
Good night.
My name is Benjamin Niles. I want to speak now in relation to small business, having started one myself and went through the processes, and I hear the challenges here, and I would like to just share some advice for people who are in that experience. So the first thing is that a bank is an institution that receives people's money who rested it there for savings and not for risk taking. So for us startups, we have to be aware, as a banker sat me down and said to me, you want me to take up John, Tom, and Frank's money who rested it here with me and give it to you that I don't know to spend, and then hope that you bring it back? So bear that in mind, right? Secondly, we have an avenue that we can use, but we somehow have seemingly destroyed this avenue over the years of relationship building so that we can borrow from friends or share with friends and work with family to raise capital to start ventures like what you suggested. These days, it seems like if somebody borrows $10 and they say they will bring it back on Friday, that they think it's strange to bring it back on Friday. So we have not practiced keeping our word, and one of the C's that was up there was character. And we must look at these things as a people, because this is what will actually make us proceed in business. Character. So if a bank don't trust you, it's the same thing as if you don't trust me. It's what nobody, no part of the world wants to be tricked. So we want reliability, and we have to practice keeping our word so that this becomes easy, this process. So I had a business, and my mother took her gratuity and lent me. And she got other friends of hers to put the money into the business, and I paid them a return. So I did not have to go to a bank for startup capital. You see what I mean? So, and I kept their information in my top pocket because I wanted to make sure that if they call me and ask me how much money their investment has added up to now, I had it readily available, right? So I wanted to share that so that we realize what matters, because a bank can't do everything. They are not in risk-taking. And as for small businesses particularly, we need to look at our relationships and need to practice keeping our word so people are confident that they will put money with us. I could tell you of many opportunities that stir in this country, and people are getting them who can go to a friend and say, listen, this thing's selling for 100,000, I got 20, you got 20, and we put together and buy it and sell it for 200. But if we can't do that, we can't get it happen through a bank, because the speed at which it needs to be happening just not practical. So relationships become critical, and we can see it happening. So I just wanted to share that.
Yeah, thank you, Benjamin. Thank you.
Thank you very much, sir. I think my final point, just so that you ladies can retire, is it your preference that a business that is not incorporated needs to be registered with Business Barbados, or can a sole trader or non-registered person still be viewed by the banks as a small business?
No, so all businesses to be onboarded need to be registered. It's just a matter of if you're registering as a sole trader, a partnership, or an incorporated entity. But to be considered as a business and to benefit from our business products and services, you must be registered with CAIPO.
Okay. Business Barbados. Yes. You have to get
Sorry,
accustomed to saying
Business
that.
Barbados.
Business Barbados. Thank you very much, ladies, for joining us tonight. And Adrian, we don't have a lot of time, but I still do have one question for you if everyone doesn't have a question. And as you are approaching the podium, I go onto my app on my bank, and I have two options. I can do a transaction, a transfer real time, or a transfer happens in ACH. Maybe just help us understand what's the difference between the two. Sometimes I choose real time, and it doesn't work. And if I go back to the ACH, the transaction goes through. So maybe help us just understand those two options.
Okay, so I'll try. So ACH basically stands for Automated Clearinghouse. Traditionally is how the banks communicate with one another. The credit unions are also on ACH. So before real-time payments a couple of years ago, when you do a transfer, it will usually take about, what does it take? A day, at least 3 business days or so, 1 to 3 business days through ACH. So real-time payments actually is built on the background of ACH, but there's an agreement in place with the financial institutions, and I think, again, most financial institutions and major credit unions are on board with it. So with the real-time payments, those things will be done in a couple of seconds, but it is actually built on the ACH platform. It's an enhanced version of that. Now, I think there are some financial institutions that still allow persons to select ACH in terms of the 1 to 3 day period if it is not a rush payment. I'm not sure the rationale behind the consumer looking at that, but that is still an option. So I'm not sure if it's a case where you are selecting the traditional ACH or real time. But you did say that isn't working properly, but that may be something that you will have to contact your banker. For the most part, it works pretty seamlessly with most of the FIs.
I have a question. You kind of hinted at it earlier about the government payment plan or payment system. I guess you're referring to BIMPay. I'm just curious as to how that's going to impact the banking system going forward. Because I mean, what you're suggesting is that this application now you don't need a bank theoretically, and if that is a feature, basically how First Caribbean has First Pay, what will the banks be doing in terms of, will credit cards become obsolete or will online transfers become obsolete? Because if you have that platform, is that something that persons, the small business persons, could then use and access a lot more readily than necessarily like a bank transfer?
Right.
So just curious in terms of how was the bank's position on that and how you're, I guess, the risks going forward and just how you're going to manage that from a bank perspective.
Okay, so I'll acknowledge that the information on BIMPay is evolving, is really housed with the Central Bank of Barbados. So I would not speak too much on that, especially seeing that the platform is now being launched. I would mention that obviously the Central Bank is in communication with all the banks in Barbados on that to ensure that the platform is basically rolled out seamlessly. You did mention something about the no requirement for an account. I am not certain that that is within the scope of what we understand Business Pay will be utilized, how it would be utilized. But in terms of being obsolete, in terms of credit card payments and everything, for the most part, my understanding of Business Pay is that it's an easy payment method being used for local transactions. I can't see in the foreseeable future that credit card payments will become obsolete. Because even if you look at it from the point of view of Barbados being a tourist-driven market, majority of our uptick in the economy is tourism-based, and you would need to have payment methods for the tourists as well as the locals. So I would say that BIMPay would not eradicate merchant services and credit card payments. I would say it would help add to the ecosystem that more persons will be able to send and receive payments more easily.
We'll make you the last question for the evening, sir.
Yeah. Hi, Adrian. Good night to all. My question is, the online payments, where you're making a payment to someone overseas, and it delays, there delays going that way. They say they don't receive it in the next 2 days. But then when they're doing a payment to us here, we receive it same time. Is it something to do with the platform or the banking system? Say, for example, RBC Canada and RBC Barbados. I find that it's different.
Okay.
What is the...
Okay, so...
What's your solution to that, please?
Right, so when you say online payments, you're referring to wire transfers if you go to your bank and you want to remit money to your relative overseas, etc.? A relative or business, correct. Okay. Okay, so the bank for some time on this end, on the local end, would have had stipulated time frames for some time when it comes to sending wire transfers to North America, US, and Canadian. I think that is stipulated across the board. I am not directly within the scope of that in terms of my everyday, but what I can see from what I observe is that it usually sticks to that particular timeline, and a lot of the processing still is actually on the receiving bank. You do have to go through some type of intermediary bank, whatever financial institution you use, to be able to facilitate the payment and then apply it to the bank where the client is. So I would say that from my limited view of how that works day in, day out, I do recognize that even some of my business clients who inquire about that, when we usually do an investigation, it is usually either stuck at the intermediary, I'm not sure the implications of that, or sometimes you will find that there are certain errors in the outgoing information, especially if it's a new business or a new person that you're sending. Any particular thing that is off, it usually is a very sensitive thing because with wires, you can't actually do much to, it's not like a credit card payment. If something goes wrong, you can claim it with the bank. A wire transfer is, to a large extent, very final. So if there are any errors in the submission, that can delay or reject the payment. So you have to get more information on the particular circumstance, but there are stipulated times for that.
So, ladies, thank you very much, Adrian. Ladies and gentlemen, I think that we give a round of applause to everyone who has supported us this evening. I just want to thank, first of all, Mr. Shimon McIntosh, Managing Director of RBC Royal Bank of Canada. My apologies. Mr. Shimon McIntosh, Managing Director of RBC Royal Bank of Canada, Barbados Limited, and the Chair of the Bankers Association of Barbados. I want to thank Republic Bank, Ms. Carleen Soudat, Managing Director, who came out despite her busy schedule, and her team, and the RBC Royal Bank of Barbados team, who also supported this evening. Mr. Michael Hall, who stayed for the entire evening. Thank you, Michael, of the IDB. Yeah, give them a round of applause. Give them all a round of applause, please. Our media who attended this evening, our technical team, led by Mr. Kevin Seal of Viral Media, Inc. Our hosts, the pastor and congregation of Western Light Nazarene Church, especially Anne, Keene, and Mr. King, who assisted our technical team. Corbin's Catering, whose refreshments you will enjoy afterwards. My team at the Secretariat, especially Mrs. Ashley Christoph, who I know the ladies and gentlemen of the bank heard a lot from today. Ashley carried probably 90% of this event, so we want to thank Ashley for pulling this all together. And thank you to you who came out this evening to be part of our audience here, and to those of you online who've joined us and those who will be eventually watching the replay. Thank you very much for being here with us. We invite you now to enjoy some light refreshments, engage if you still have time to do so. Have a good night and a safe journey home. Thank you.